Yeah, it's your boy Crypto Blood, and welcome to footage of an exclusive interview I have courtesy of my guy Todd Mahar. He's a subscriber of mine. He's actually a blockchain AML consultant out in Ohio, and they had a chance to talk about the future of blockchain and regulation and how the SEC fits into this whole process. It's ever changing, as Hester Peirce talks about. So I hope you guys enjoy this part one. Don't forget to like, share, and subscribe, and click that bell, people. Holla.
First of all, thanks everyone for coming. My name is Todd Mahar. I'm, as you said, a board member of this local Northern Ohio ACAMS chapter, and very delighted to have Hester Peirce speak to all of you in regards to the changing regulatory environment of the SEC and what kind of role that they play in the larger picture of our financial markets.
So Todd, thank you for the invitation to be here. It's a delight to be here. Thank you to ACAMS for this opportunity, and the Financial Integrity Institute as well. It's a real pleasure for me to be back at Case Western Reserve. I actually lived right over there for a year, my first year of college. Before I moved off campus, I lived here, so I know the area well, though it's changed quite a bit since I lived here, for the better. So it looks beautiful. And I have to start with my standard disclaimer, which is that my views represent my own views and not those of the Securities and Exchange Commission or my fellow commissioners. I should say not necessarily those of my colleagues. And so with that, I just want to thank you all for being here this evening and encourage you. I think at the end we're going to do some Q&A from you all, so I want to hear what you all want to talk about. If there's a pressing issue in the interim, I'm sure we can, if you're dying to ask a question, I'm sure we can accommodate that as we go along. But just to give you a little background, I think a lot of you are from a bank background and not necessarily, you deal with lots of regulators and probably were not the primary ones on your radar screen. But the Securities and Exchange Commission is responsible for a big chunk of the capital markets. We share that space with the Commodity Futures Trading Commission. And so we have responsibility for, among other things, broker-dealers and investment advisors and investment companies, and they perhaps you come into contact with them through your work. And so one of the issues that we've been confronting in the area of AML since I've been there. So I was at the SEC before. I was there for 8 years and started out as a mutual fund lawyer, and then ended up working for a commissioner, which is the role that I have now. Left, went to the Hill, was there during Dodd-Frank, during the financial crisis, and then Dodd-Frank. Left there, went to write about financial regulation, and then came back to the SEC as a commissioner. And so I had been gone for about 10 years. And one of the things I noticed upon coming back is that one area that we do bring a fair amount of enforcement actions is related to anti-money laundering. And so specifically, we have gone after a number of firms for not properly figuring out when they need to file SARs. And so I've been urging the agency to be a little more active in providing some guidance on when suspicious activity reports should be filed. A fear that I have is that by bringing actions like this, we're sending a message that more is better, so just keep filing SARs, and that's not actually what's most useful to us. We need to have people thinking about why they're filing SARs and making good decisions about whether to do that. And so that has been an area that has been of interest to me, and I welcome your thoughts on things that we could do to be helpful in providing some of that guidance.
Thank you. I think another question that was brought up by a couple of people in our group regarding the SEC, I think a lot of us know, generally speaking, what the SEC does. But one of the confusion points for, I think, a lot of us is, where does the SEC's jurisdiction and powers lie? When you look at the SEC, you see enforcement actions, you see no action letters. you see them go after certain companies civilly and criminally, and then you see kind of a cooperation with the Department of Justice and FinCEN and other regulatory agencies. Is there any way to clear up the relationship as well as the jurisdiction and powers of the SEC and kind of to clear that up for us?
Well, I should say that there are some disagreements even within the SEC about what the reach of our jurisdiction is, and so some folks there are a little bit more creative in reading the statutory framework than I am. I think we need to stick closely to what Congress asked us to do. But so we actually only have civil authority, and I like to tell people the SEC is primarily a regulatory agency, not primarily a law enforcement agency. It's more exciting to say we're a law enforcement agency, but I think there was an episode of The Simpsons that had SEC folks with SEC emblazoned across their backs jumping onto a boat with guns, and it was really exciting, but that's not what we actually do in real life. So we're much more, if there is a criminal aspect to something that we're working on, we're partnering with Department of Justice. And so sometimes that can be a little bit difficult because the marriage between civil and criminal is always a little difficult, but they're always working alongside if there is a criminal component to it. And sometimes I would like for Department of Justice to be more involved in our space than they are, because often our cases, securities violations can be quite complicated cases to bring from a criminal perspective. And so often, unless you have someone who has a real interest in the issue area, it's difficult for us to actually get as much criminal involvement in this area as sometimes I think would be good. So we bring lots of cases that could be brought criminally, but sometimes there isn't a criminal component to it. So our jurisdiction is primarily broker-dealers, investment advisors, investment companies, as I said. We do exchanges and other types of market utilities, market infrastructure, and that's where our jurisdiction, that's primarily the perimeter of our jurisdiction.
Now, to kind of expound upon that, the SEC, generally speaking, takes a territorial jurisdiction. For example, they mainly handle companies operating in the United States. However, once a company that may not be in the United States takes on a U.S. citizen as an investor, the SEC, once that happens, can claim jurisdiction in order to protect the U.S. citizen. Is that accurate?
Yeah, so again, that's another area that's really increasingly interesting, because as our financial markets are so global now, it's really hard to set up a financial company anywhere in the world and sort of wall off U.S. investors, though some people actually do try to do that. They say, we have no interest in serving U.S. investors because we don't want to engage with the SEC. We just don't want to have any part with it. But that means that you have to take steps. If you know that you are, as Todd said, if you know that you're dealing with a U.S. investor, so a foreign company reaching into the U.S., dealing with U.S. investors, you're inviting us to look at what you're doing. And so there have been some cases recently where we've had to grapple with this question of where exactly does our jurisdiction reach. And because our resources are limited, so there are always plenty of things that we can go after. One of the questions I ask is, if there was an inadvertent reach into the U.S., is this really a case that we need to bring, or should we focus our resources somewhere else on someone who's really concentrating on reaching U.S. investors? I think one area we're seeing some challenges now is with respect to cryptocurrency, because there are lots of firms that are making the decision that they're not going to try to touch U.S. markets until there's more clarity from us on what our regulatory framework is. So some of those issues are very live right now.
Yeah, Hester, and it seems like at a statewide level, a lot of things are being done, whether it includes privacy or statewide transactions. For example, Texas recently passed legislation that kind of bans cryptocurrency transactions without AML and KYC and totally eliminates the possible use of privacy coins. When I look at legislation like this that may seem overreaching to other states, but it seems to be, I mean, on the total opposite end, you have like Pennsylvania and Wyoming that are very crypto-friendly. So when you look at this type of legislation being on a statewide basis, and then you look at national banks that have to deal with cryptocurrency and exchanges, one of their concerns may be, we're taking a little bit higher of a risk in dealing with cryptos in Texas. However, if we have a customer in Pennsylvania, we might be more accepting. Is this something you see on a state-by-state basis occurring, or do you see eventually a broad line kind of, you can do this, you can't do that kind of basis from the SEC?
Well, I think that is one of the issues that crops up just in financial regulation generally in the U.S., as I'm sure you're all aware, because we do have this dual system where you've got state regulators and then you've got federal regulators on top of that. In the securities space, we've taken care of this to some degree because we have some authority to preempt state law, and so that's enabled us to have more of a national market because we can say that we're overriding state law. But states, of course, want to retain their jurisdiction, and I think in this area of crypto, there's been a lot of interest from states in asserting themselves. Some states asserting themselves in a way to be quite proscriptive, and others saying, no, we want crypto to be in our state. I'm hoping that the SEC will come out with some more concrete guidance relatively soon, that our staff is working on this. So I think that will be helpful in sort of setting some better understanding about what we're doing at the national level. But I think the state efforts will continue, and I think we need to work together with our fellow regulators as we do, but it's a little bit more difficult. We work quite closely with our state brethren on securities regulation, but they're also, because there's so many different folks in this space, in the crypto space, it becomes a little more complicated because you've got to work with state banking regulators too. So I think seeing some more national coordination could be helpful, but it's not an easy prospect.
It almost seems like state-by-state marijuana legislation when it comes to the banking system, that kind of disconnect that occurs on the state level. Another thing that kind of is variable amongst financial institutions is intercompany communication. A lot of people here are familiar with the 314B process, and there's other people in the audience that work on broker-dealer. And whenever you're doing 314Bs to try to find out more information about a transaction that is occurring involving like a bulk purchase of securities, there seems to be a different type of language that's used in broker-dealers as compared to the traditional financial system. I don't know if I used that properly. But I saw what you did with Regulation A and the expansion and the mainlining to make it more efficient. It almost seems as though if we had some sort of baseline for 314B communication to simplify and make it more streamlined, then it could make that process more efficient while also protecting the privacy of the customer. So
I think it is important to remember the 314B process is a voluntary process, and so that's how we look at it. You know, we of course encourage good cooperation with us and, you know, with others in the industry to try to really get to the conduct that we're trying to identify. And so I think that the 314B process has a really important role to play in that. I was happy that Todd raised this issue with me. He actually, as we were talking about this event tonight, he raised the issue with me, and it was one that I took back to the staff at the SEC, and I said, you know, I think there might be a need for some better guidance out there about what some of these things are. So one thing they said is you should always feel free to reach out to the SEC if there are any questions on terminology or how our rules apply in this space, or, you know, if you're dealing with SEC registrants and you have questions, don't hesitate to reach out to us. We've got a number of different ways that you can do that. There's fairly good communication between us and FINRA on these issues and many others. I mean, we actually have a very close relationship with FINRA. SIFMA, which is an industry group representing broker-dealers, routinely interacts with us on these types of issues, and so that's another forum where if you have concerns, you should feel free to reach out to them, and they in turn, especially if it's something that you would rather not come to us directly on, it's always fine to work through those industry groups. And then we work with our fellow regulators, so we're on the Bank Secrecy Act group, the BSAG, and that's a way where we can take concerns like these and say, hey, maybe there's an area for us to work on together with the banking regulators, just embedded in what we do also. So it's unlikely to change, but I think we can work together to make sure that that people are understanding and getting the guidance they need to understand what the terms are that we're using. So feel free to reach out to me. We have those conversations, and then that should enable us to address some of your concerns.
What's your opinion on some of these cases and how they're being used to determine how to treat cryptos and how accepting of institutional investors and other financial institutions of them would clarify for them?
Crypto's been a very interesting case.
All right, guys, hope you enjoyed that part one of the interview with SEC Commissioner Hester Peirce. Make sure you guys tune in for part two. Subscribe, like, share, all that good stuff. Part two on the way soon. I'm out of here, people. Holla.